The Little Book of Common Sense Investing is a best-selling investment guide that has been praised by many readers and investors for its practical advice and straightforward approach to investing. The book is written by John Bogle, the founder of Vanguard Group and one of the pioneers of low-cost index fund investing. In this book, Bogle provides a comprehensive overview of his investment philosophy and strategy, emphasizing the importance of keeping investment costs low and avoiding the many pitfalls of active investing. The Little Book of Common Sense Investing is an excellent resource for both novice and experienced investors looking to build a long-term, successful investment portfolio. Some of the key takeaways from the Little Book of Common Sense Investing include: keep costs low. Bogle stresses the importance of keeping investment costs low, as high costs can eat into investment returns over time. He recommends investing in low-cost index funds instead of actively managed funds. Avoid market timing. Bogle discourages market timing, or the practice of trying to predict when to buy or sell investments based on market trends. He argues that market timing is difficult, if not impossible, and that it often leads to poor investment outcomes. Emphasize diversification. Bogle emphasizes the importance of diversifying your investments across different asset classes, such as stocks, bonds, and real estate, to reduce overall investment risk. Stay the course. Bogle encourages investors to stay the course, even during market downturns, and not to panic and sell their investments. He believes that long-term investing is the key to success. Avoid hype. Bogle warns investors against succumbing to the hype surrounding hot stocks, mutual funds, and investment trends. He argues that the best investment strategy is a simple, low-cost, and diversified portfolio that is designed to achieve long-term growth. Focus on returns, not market performance. Bogle argues that investors should focus on their long-term returns, rather than trying to beat the market in the short term. He believes that low-cost index funds provide a reliable way to achieve long-term returns. Rely on evidence-based investing. Bogle advocates for evidence-based investing, which is based on academic research and data, rather than speculation or gut feelings. Be mindful of taxes. Bogle highlights the importance of considering taxes when making investment decisions, as taxes can significantly impact investment returns over the long term. Ignore the noise. Bogle warns investors against being influenced by market predictions, financial news, and stock tips, as these can often be misleading or irrelevant. Have patience. Bogle emphasizes the importance of being patient and not making hasty investment decisions. He believes that success in investing comes from sticking to a long-term strategy and avoiding short-term temptations. Understand your own risk tolerance. Bogle suggests that investors should have a clear understanding of their own risk tolerance, as this can help guide investment decisions and ensure that an investment portfolio is aligned with personal goals and objectives. Avoid high-cost, actively managed funds. Bogle argues that high-cost, actively managed funds often underperform low-cost index funds and can lead to lower investment returns over the long term. Diversification is key. Bogle highlights the importance of diversifying one's investment portfolio, as this can help reduce risk and improve returns over the long term. Stay disciplined. Bogle encourages investors to stay disciplined and stick to their investment strategy, even during market downturns and periods of uncertainty. Keep things simple. Bogle advocates for a simple, straightforward investment strategy, rather than complex and speculative investments. He believes that a simple, low-cost, and diversified portfolio is the best way to achieve long-term investment success. Focus on long-term returns. Bogle emphasizes the importance of focusing on long-term returns, rather than short-term market performance. He argues that a long-term investment approach is key to success in investing. Trust in the power of compounding. Bogle stresses the importance of taking advantage of the power of compounding, as this can significantly increase investment returns over the long term. Be wary of hype and trends. Bogle warns investors against getting caught up in investment trends and hype, as these can often lead to poor investment decisions. The Little Book of Common Sense Investing is filled with wise and insightful quotes from John Bogle. Here are 10 of the best quotes from the book. The simplest and most efficient investment strategy is to buy and hold all of the nation's publicly held businesses at very low cost. You get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready, you won't do well in the markets. Don't look for the needle in the haystack. Just buy the haystack. Buy a cross-section of stocks and hold them, because diversification is the only free lunch in finance. The 4 most dangerous words in investing are, "This time it's different." In investing, you get what you don't pay for. The future is never clear. You pay a very high price in the stock market for a cheery consensus. Long-term investing works, and it will continue to work as long as people have the patience to let it. The stock market is filled with individuals who know the price of everything, but the value of nothing. The best thing a human being can do is to help another human being know more. These quotes provide a glimpse into the investment philosophy and strategy espoused by John Bogle in the Little Book of Common Sense Investing. In conclusion, the Little Book of Common Sense Investing provides a valuable and practical guide to building a successful investment portfolio. Through its focus on low-cost index funds, evidence-based investing, and a long-term perspective, Bogle presents a simple, yet effective approach to investing that can help individuals achieve their financial goals. The book's emphasis on avoiding speculation, hype, and market noise, and instead relying on disciplined and patient investment strategies, is particularly insightful and relevant in today's fast-paced financial landscape. Overall, the Little Book of Common Sense Investing is a must-read for anyone looking to build a solid foundation for their investment portfolio.